Greetings everyone, Joseph James here from theschooloftrade.com, January 20th, 2010. This is a Wednesday. This is your live trade room recap. 11 trades today, guys, in the room. Just over $1,000 USD, and of course that brings our 2010 totals over $3,000. We'll keep you guys posted through the rest of the month. Well, I think the thing we learned the most today in the live trade room, guys, was that aggressive entries require aggressive exits. I can be aggressive with my entries because I know exactly what to look for with my exits. So I have no problem jumping into a marginal trade, right, an aggressive entry, as long as I'm prepared to have an aggressive exit. If you get in aggressively, you've got to be prepared to get out aggressively. And we'll show you guys how that applied here to our first trade of the day here on gold. We took our first trade this morning, guys, on gold, and it was a loss. When we take the first trade of the day as a loss, guys, it's, of course, how we react to that loss makes the rest of the day. This was one of those classic examples, guys, of how we made a quick decision to get in, kind of jumped the gun a little bit too early this morning. 8:55 this morning, of course, we had the short-term trend here was down. Dotted blue line here, right, this is the low of the day. What are we always looking for? Low of the day, two-step pattern long, right? Swing high was at 23.9, got filled there at 24 even. But guys, a great example, and you can see down towards the bottom here, I wanted to show you guys an example of what the pace of the tape indicator looked at that time. Now, at the bottom of the snapshot, you'll see the pace of the tape indicator. And look at how slow, right, the pace of tape was. Momentum, as you can see right above it here, momentum curled and pointed down. So, of course, we got in a little aggressively. We had to be prepared to get out aggressively. We did so by moving our stop up from 6 ticks back up to our entry. We were able to get out for -1. Of course, times 4 contracts is going to be -4. Let's see what happened, of course, after the U.S. Open, continuing now on gold. Right now here at 943, we had the short-term trend was up. Remember, guys, a two-step pattern is the perfect price pattern for a choppy sideways market. And that's exactly what happened here. On a two-step pattern, guys, make sure that trigger line for a short trade is above your price, right? That way you got plenty of room to fall. Or for a long two-step, make sure the trigger line is below your price. That way there's plenty of room to launch. So in this case, right, we had to wait to get below this trigger line right here. Once we got below it, we got filled at 21.9. We took our +4 target, then moved our stop down to our point of entry, -1, got stopped out of our stop at the point of entry for a +10 ticks or $100. Next up on the Russell, symbol TF, this is at 10:04. Now you'll notice obviously short-term trend here was down. Now when we look at the low of the day, what do we need? I need strong sellers, green pace of a tape, right? If I'm going to short the low of day, a high profile level, I want to make sure I have excessive sellers and strong price action supporting that short trade. Remember, guys, we always mark up that swing low. It's automatically done so for us on our charts, courtesy of the auto levels indicator. 10:04, we got +4, +8, and then +5, 21 ticks total or $210. So again, at the low of day, always check two things. I want to see strong sellers and green pace of a tape. Now, this is an example how we took the low of the day. We actually shorted the low of the day. Let's keep going, though, of course, right? Put 21 ticks in our pocket. This was shorting the low of the day. Well, what happens when we bounce off the low of the day? Good example right here. At 10:11, right, only about 5-6 minutes later, we again on the euro had our short-term trend was down, right? Short-term trend was down. Now again, right, we have the low of day here, right? That dotted blue line. Whenever I see low of day, I'm always thinking two-step long. Whenever I see high of day, I'm thinking two-step short. Once again, we mark up our swing high here at 21. Again, short-term trend was down. We anticipate the low of day holding and to bounce off the low of day. So we mark up our swing high here at 21. We got filled here at 41.23 for a long trade. Again, two-step long, counter trend trade. Got +4, +8, and then trailed our stop for a +7, 23 ticks, guys. It's actually 1250 per tick. So multiply 23 times 1250 to get your total there. But on the euro, of course, 23 ticks there for a counter trend trade. So in the previous trade, we shorted the low of the day because we saw green pace of a tape and strong sellers. Either way, guys, whether or not we break through the low of the day or we bounce off the low of the day, another example, guys, of how we can play these markets wonderfully here, no matter what the situation is. Keep moving here, guys, on the gold, 10:17. Of course, again, short-term trend was up. Right, short-term trend is up. I have a red line here, right? This red line is located for us by our auto levels indicator. We, of course, expect this line to hold, right? This overhead level resistance to hold. We, of course, bounce back down. We mark up our swing low here. 16.2 was the swing low. We, of course, looking now for a counter trend trade against the short-term trend here on the gold. We got short entered fill at 16 even. We got +4, +8, and then it came right back up to stop us out at our entry -1, of course, right? Move our targets +4, +8, move a stop down to entry -1. Okay, so my stop is sitting right here, right 16.1, and that's exactly where we got bounced out. 17 ticks total, $170, guys. As you can see, this is quickly now piling up here. Let's keep moving. 10:17 takes us half an hour later to 10:56 on the gold. Now, this is a great example, guys. Remember, sometimes we're going to take losses. Sometimes we'll have winners. It's all about how we manage the trade. All about how we manage the trade. Another great example here, right? Short-term trend was up. Once again, right? Once again, we're looking for the reversal here, right? So at 10:56, guys, looking for the reversal here, guys, on a two-step below, right? This 11.9 got filled 11.7. Now, in this point, we exercise the 5-second rule. Remember, guys, if I don't see my first target filled within 5, 4, 3, 2, 1, I'll move my stop down from -6 ticks down to my entry point, which is exactly what we did there. And as you can see, right, it kind of jumped back up there. I'm glad we moved our stop down. We may have been able to hold through it, but guys, at the same time, remember, if the price isn't going anywhere, I'm not going to stick around to see where it went. All right, if it's not filling my first target within 5 seconds, I'm out of that trade and on to the next. And of course, the next one showed up, boy, just a couple minutes later. Here, 11:04 now, right back, still on gold here. Of course, now the short-term trend is down. We mark up our swing low, and we got filled here at 10.4. A +4 target was filled. Move our stop down to entry -1. We got filled that one, so of course that totals 10 ticks total or $100. So we took a scratch trade on our first trade here, guys, 10:56. 5, 4, 3, 2, 1, right? The 5-second rule. Move our stop down to entry. If it wasn't going anywhere, we wait for the next one. The next one came only a couple minutes later. Got filled to 10.4. Now, of course, going with the trend now, we mark up our swing low here, and we break below the swing low, right, just after, of course, 11:04. Got filled there for 10 ticks or $100. And guys, as you can see here, we're quickly here getting up towards the $800, $900 range here on the day. Next up was on the Russell. Next up on the Russell. Now, this one was a good example, guys, of the 3-strike rule. Now, what is the 3-strike rule? The 3-strike rule says if I don't see my target filled within 1, 2, 3 attempts, I will then manually fill that target. Exactly what we did. Short-term trend was down. We have the low of day here, right? What am I thinking at low of day? 2-step long. So, of course, we're initially looking for the breaker pattern short. But if I'm not seeing green paste of a tape, if I don't see big sellers, I'm not going to sell the low of a day. I'm going to be a buyer at the low of a day. So unless I see these sellers demonstrate, of course, tape reading, of course, right? Always reading tape. Unless I see the sellers demonstrate this low of day is going to break, I have to assume it's going to hold. And therefore, we look, of course, for our 2-step pattern long. Entry here was at 31.3. We took +3. Now, guys, remember, that's that 3-strike rule. So I'm going to watch my first target get tested once, twice, 3 times. If my first target is tested 3 times and doesn't fill me, I'm going to move that target down and manually fill that target, which is exactly what I did. So we got 6 ticks out of the first target, and then of course our stop is moved up to entry +1 here for a long trade, and of course you can see it got bounced back out. So +3, +1, that totals 8 ticks or $80. Great example of the 3-strike rule. And finally, guys, here the last trade of the day, guys, on gold, we finished up with another winner here, 11.19. Of course, short-term trend here was to the upside, right? Short-term trend was to the up. Now, this is a very easy pattern, right? We make our swing high here, 11 even. We get filled 11.2, +4, right? First target +4, move the stop up to entry +1. As you can see, very short-lived here, right? It came curled right back down. But, of course, that's exactly why we manage our trades the way we do, guys. All right, so put $100 here, 10 ticks. Total them all up, guys. 95 ticks on the day today, over $1,000. Let's prep for tomorrow. Tomorrow's Thursday, January 21st. Now, guys, we have the crude inventories number that was postponed from today, Wednesday. So be ready for that tomorrow, guys. 8:30 jobless claims, 9:30 U.S. Open. We got 10 o'clock business inventories, 10:30 nat gas number, and that 11 o'clock crude inventories number, which was delayed from today because of the Martin Luther King holiday. Don't forget, tomorrow's a Thursday, too, and we have a webinar tomorrow at 11:30 Eastern Time. Let's recap. Live Trade Room opens up at 7:45 Eastern Time for guests and lifetime members. Guys, if you're watching this video right now on our YouTube page, below the video in the description, 2 links. One for the 12-month track record. The next is for our 3-week trial. That's right. Come out and join us free for 3 weeks. We'll do free webinars on Tuesdays and Thursdays at 11:30. I want to remind you guys about the beginner's course. Grab a copy of the beginner's course. Gives you all the information about our setups and our entry rules. And guys, once again, price increase coming February 1st. Guys, don't miss out on your opportunity to grab a couple 5% discount coupons that are still hanging around for January. My name is Joseph James. Hope the video helps. Great job today to all the members and the guests in the trade room. We'll see you guys next time. Bye-bye for now.